Check, mic check, 1 2 1 2. What's going on, everyone? Good morning. Happy Friday. I hope you are all well and doing great as we get here. This is Jordan from Conquer Trading and Investing, getting ready here for our public live stream. It has been and become a habit. We're going on 3 weeks now, and I'm here every day, Monday through Friday at this time to cover the markets with you. We have for sure this morning on a teeny weeny binny dollar weakness. We have crypto popping off over here. It's been a while since we've seen anything like a 10% candle, green candle to the upside on Bitcoin occur. It is welcomed, at least to the upside. We've seen lots of them to the downside. We've grown quite accustomed to the downside. Replay crew in full effect. Great to hear. Great to have you here this morning. Yeah, it's been a week full of lessons. I cannot point you to one session this week, which was a standout. I think they were solid, true, all of them. And if you have to catch up on the weekend, I think it's a good idea. Lots of valuable insights shared, including over here on the DXY as we've entered the sell impulse over here. This is coming off, by the way. Yesterday's 75 basis point hike by the ECB. Now, you might wonder, well, if they're so far behind the Fed, and the Fed is expected to, in a couple of weeks, raise rates again by 75 basis points also, why would there be any type of let's say, divergence taking place over here? When I say divergence, I'm talking about divergence in central bank policy. What we are beginning to look at, and it doesn't look like it's going to be this month, but we're beginning to look at is potentially a slowing rate out of the Federal Reserve of the degree of their rate hikes. Now, I thought that we were looking at, depending on what the CPI was next week, we have the CPI coming up on Tuesday, and I don't really know how to kind of weigh this in now at this point, because the Fed made it clear through their leak at the Wall Street Journal that they want to make sure that they're very clear to the market. The following week after, on Wednesday at 2:30 p.m. Eastern Time, press conference, 2 o'clock p.m., the rate decision, they're going to be raising rates 75 basis points. So what I thought was dependent on whether or not this was, let's say, within expectations or coming in overly soft, which I think it's going to come in overly soft. And then we also had not only our own assumptions about that, we had Janet Yellen also, let's say, putting out there that it's going to be a soft reading as we've watched food and energy come off in the last several weeks. But the Fed seems to be setting up for a 75 basis point hike. I don't really know how to interpret this then. So I'm going to have to watch how the market does it. I don't know how to put that piece of the puzzle. And if anyone has any thoughts on that, I'm greatly interested. But we were talking about how as the ECB gets ready to raise rates, and they are more or less, even though they had a 25 basis point hike recently, they are starting to come in more aggressive as the Federal Reserve looks like. I thought it was going to be this month data dependent. I guess it'll be in November, begin to come off softer. And does it make sense for the DXY to kind of just retrace a little bit here as the euro gets a little bit of a bid into it? I mean, right now it's just market fluctuations, right? Now that we have this sell impulse, we are looking to see if we come into a test of the resistance below. Last time we broke below that was quickly faded. Right now we're just looking for a test. It's somewhere around the 107.5 to the 108 area, depending on when it occurs. And we're going to expect support to hold. And then we'll watch and we'll wait until we can set up some type of, it's not there yet, but eventually when we have whatever type of trend line break to the upside, we will look for a continuation back towards this trend in place with the stronger dollar. Nevertheless, we have to watch what happens on price. And even though this is a very counter trend right over here, this sell impulse, it's how trends start. You know, like over here, this one was a counter trend sell impulse, and it went a little farther than people expected, but then it got faded on that breakdown. It came back for the retest. You can see the retest, it started resuming off, and then the breakout. This would have been a fantastic entry occurring in that area. So we wait and we watch. A lot of people today and this morning are, making assumptions about whether or not we are seeing the bottom being put into Bitcoin, or you see a lot of bears out on the defense talking about there's no way the bottom is in, because when the bottom is in Bitcoin, you won't see anyone calling the bottom. Look, that's not the case. If you go back to 2018 December, the bottom, there were many people calling the bottom. There were many people calling for significantly lower prices. So 1,500 Bitcoin on the hyperwave, and that's what was making the rounds through all of the influencers. But a lot of people were looking for and calling the bottom. In March 2020, on the BitMEX capitulation, a lot of people were looking for the bottom, and I myself in both those instances was looking for the bottom, but I'm not here and I'm not now, and I'm just and have adopted. Look, these times right now are truly unprecedented, and I don't know what happens next. It's very hard to look too far out. So because of that, I'm just gonna take it as it comes, and it's been a good, like a honeymoon type morning so far. And what do I mean by that? We see the dance between Bitcoin and Ethereum continue. You see, by the way, as we were looking at this descending wedge yesterday, CTM 1.0 style, the nice breakout that has occurred. It's very clean. By the way, it's reminiscent if you look back at what happened last summer. What do I mean by that? It was out of a descending wedge that we really put in that low, that bottom. Let me try to zoom in a little. Okay, the mouse was stuck for a second. You have over here that descending wedge. Now this was a bigger bottoming pattern, right? It took a few months, but nevertheless, it was out of the descending wedge that price broke out. Are we seeing something similar take place? I mean, no, it's much different actually. This is just a wedge that's lasting a few weeks, a couple of weeks. It's much more narrower. It's different. Is this reminiscent of bottoming patterns that is taking place, whether it's 2018 or in 2015? It is. It is coming. And there's a lot of people actually who have been almost very strongly confident that a bottom is being put in. I'm not one of those people. And then you have people who kind of are trading both ways. I have to give really just major shout out props to, I think his name is El Capo, if that's correct. But as Bitcoin was breaking down over here, I'm just come back and show you the breakdown that as Bitcoin's breaking down over here, someone with a very bearish bias as like bears celebrated over here that like we were about to make new yearly lows, which was taking place. You saw him pointing out that he expected a bounce and a sharp rise to 2,300. So look, that's someone that I have to say and affirm very much on top of it at that particular moment, and it's nice to see. It's beautiful to see. This caused us to take some profit off the table. It wound up being 10.5% trade. I mean, 11%, which is fine, which is good, right? I know that this had fallen almost 20% into profit, but on a momentum-based system, that's always how it's going to go. The exit is always going to be never the peak open profit. It always gives back gains. On a sharp candle like this is a 10% candle we're looking at off, today alone. And, you would expect to give up more gains, right? It doesn't have time to roll out. Nevertheless, the dance takes place, whereas Ethereum was able to get into a buy long trade well before the exit. So why this is sitting, 4.5%, 5% into profit, and Bitcoin booking profit. It's a good day. It's a honeymoon day for sure. We like to see it. We do have a big week next week because the CPI is going to be or should be showing that we are seeing signs that indeed we are looking at these really strong, ferocious inflationary forces beginning for now to wane, for now. And what that means or how the market is going to interpret that, I'm really not sure. And I'm really not sure because, well, again, the Fed is pretty much letting us know what their plans are for the week after. And you know what I want to watch, or the only thing that I want to watch this day, whether regardless of what it comes in, but the only way that it will have an effect is if it comes in overly soft, to see what the market prices in, whether it continues to price in 100% chance of a 75 basis point hike, or if that starts falling off. And if it does fall off significantly, how does the Fed over the weekend put out another leak into the Wall Street Journal? I don't have the answer to this. I for sure am going to just trying to be observing and seeing what the market pays attention to and how it works out. We could see as the dollar comes off an extension over, and this is so far just noise, right? So you have people probably attacking Brent Johnson, dollar milkshake theory, as the dollar comes off less than 1%, oh, the top is in. And it could be. I have no idea. You never do. But I mean, I don't see much of a difference except for something that was way overbought, peaking out to making a new yearly high, a 20-year high, all of a sudden just completely like doing some natural things. So I can't read into it. The equity markets are a little bit different over here, right? And we were able to talk very clearly earlier in this week, since we're here every day. Now that we're here every day together, as all of this price action unfolds, you're going to have the rhythm, because each and every day we're putting ourselves in the place where we're preemptive of what happens next. Now, that doesn't mean that we have a crystal ball and know what happens next, but at each, let's say, the purpose of TA is to have different levels to be able to manage risk around. So, for example, this trend line that we draw over here, when price was below the green line, when it was below the broken support, right? We said, okay, this should come in for a retest of that green line. And then we put this trend line above it. And we said, until there's a break of that, we would consider this to be holding that broken resistance as support. And then as price broke above it, right, it came back in for a retest. As it was red all the way down to the bottom, we were pointing out the only thing that has happened is this has had a breakout and is now coming in for a retest. This is going to need to fall below to be a failure. And right now, and then from there it went up and it resumed off, and here we are, right? And we're for sure entries occur not in the middle, right? And the entry, if you were trading this, is over here, right? Here's the breakout, here's the retest, and then on the resumption. And if you took this entry right over here on this bar probably took an entry and then wicked down over here to the middle, right? So it's not like straight up and easy. And then on the next bar, you came back down and you tested again before coming back up to where you are right now. Nevertheless, very clean. Now, I could say above on the NASDAQ, we still got a little bit of a ways before we come into any meaningful resistance. Are we looking at any bit of light local resistance straight ahead? Sure. You could see it right over here. You could see where these candles wicked into, this wick over here, and that's the area that we're into here on this Friday. So let's see what happens on this Friday. You might have, and this is a very important sign, you might have some traders who want to get neutral going into the weekend. A lot of traders, or any traders that were, I don't even know, by the way, if today's move is mostly coming yet from shorts covering, if it's coming from any type of buying or what have you. I'm just watching the price right now. But it'll be interesting to see whether or not the market is able to hold on to these gains or even extend them. Maybe price is able to already up pretty impressively go ahead and break above that area of resistance. Then we'll have our eyes over there. S&P 500, by the way, if you're here this morning, we're 195 strong. Please go ahead and spread the love and smash the like button. Good morning, everyone. I'm glad to see you, Sam. What sad news? And when I say it's sad, it's for all my friends out in England and in the Commonwealth, who that's very important to them. You always want to mourn with those you love. Kevin, good morning. Tom, fantastic. Great to see you. Bum. So with the dollar sign, bum, all over it. My brother. All the way down here. I don't know how I need to know more. Um, so oil at the same time this morning, right? What did we do yesterday as oil was over here? It was right there, right at the top right there. We said, well, we have this little bit of overhead resistance, right? And then even above it, we need to give it some room. And then we put this line over here. And we talked about this whole area is going to be resistance. And then if price makes it above, at that point, we will say, all right, then the odds of a move towards 96 is much more potentially probable. It's in the cards. Right now, this continues to be a downtrend. And if this holds as resistance, this offers the opportunity actually to continue adding to your position on the short side. So whether or not that's too aggressive yet or not remains to be seen. But we're going to go ahead and, yeah, it's too aggressive. That angle is too steep for me. We'll continue watching this and give it a little time. Even if this rolls over, I'm saying, well, it's better just to stand aside and continue to hold and push. So this view or work that we've done together on oil, as I saw in the comments, has helped some people hold through all of this. So that is beautiful, and that's why we're just doing here what we do here together is look at the markets and just gain clarity, and then that clarity or that view being shared is either going to help you firm up your own opinion of what you see going on, in that you agree with what I'm sharing, or that you see it a different way from what I'm sharing and you don't. The whole idea, the whole point is to teach you and work on your skills so that you're able to navigate these markets. What about this breakout? Is that a potential breakout that's occurring over here? Is that something of interest? I don't know. I like the horizontal resistance right now, and we'll just give it some more time and wait and watch. We want to just continue looking at gold, and I understand that it's hard for anyone to fall into favor with gold with the current with yields as they currently are, and not only yields, as energy's also, with energy coming off a little bit, I would say that's a little bit supportive of gold from the mining aspect. But gold continues to be under pressure. This resistance, this trend line resistance, continues to hold. Price is trying to break above it, and I think that silver continues to show a little bit more strength because it's broken above the resistance and is now coming in for a retest. This actually green light's what we were looking for. Do you remember over here we saw the trend line break, but we said buying into resistance? No, that we don't want to do that. It's too close. So we want to see what happens, and then off of that resistance, you could see it, backed off a little bit, then broke above, and is now looking at that line again for a retest. So it's Friday. You can't take a position on a Friday this late into the session. You can't, right? So what are you doing? I mean, if you're probably checking this off and you're putting that up on the list. Let me put it on like go, green for go, and watching what happens on Monday, whether or not the opportunity for a setup arises, for an entry arises. But silver, I would say, is now potentially setting up for what could be an entry. And regardless of like what you think, in this particular moment today, and we'll see if it's lasting or not. But risk is rallying because the dollar is just getting, a small bit of a reprieve. You'll have people out there who will be insistent that the dollar is not peaking, and you will have people insistent that it is topping. We know not either which one of those is the case. We are just here to continue to trade what is happening and stay on the right side as best we can. Ethereum, Bitcoin really extended out of that little green beautiful break, and it's just consolidating those gains right now. So there's not too much to read into that. Bitcoin is significantly stronger today. If you looked at where Bitcoin dominance thus far has bottomed, right? 38.88, 38.9. I'm trying to figure out what I put out on the Twitter on June the 12th or June the 11th when a lot of people were really confident that Bitcoin was headed towards 60% dominance. And I said, what do you think happens first? Does it break 60 or 38 point? I don't know what it is. It didn't break it. It might have touched it exactly. I hope it touched it exactly. Actually, it might have broke it. I'm going to go back and look at that Twitter post later and find out what it is. What does that mean? Is that indicative of anything? I think, see, the way that I look at today is it's not too much or anything more than a little bit of, let's say, like sell pressure, strong to the downside, trade becomes crowded, and then all of a sudden everyone gets comfortable on the downside, right? And then whack to the upside. And that's all it is. For me right now, it's noise. And doesn't mean that we're not positioning because of the noise, right? Well, we are positioning because of the noise. And that even means, by the way, for myself, in 2 hours, it looks like a Bitcoin buy entry is setting up. And it's not nice, or it's not a comfortable feeling buying something that is up 8 or 9%. That, I mean, my intuition as a trader, as an investor, goes against that. I wouldn't do that. I don't do that. But my stop loss in this case will be 2.5%, and I'm a systematic trader, so I'm not really attached to any individual result whatsoever. I'm sitting here following the strategy that I developed, that CTM HiveMind has helped design, and that is what the edge is. So that means having the discipline and the fortitude, regardless of what I think, to make sure that I follow that. And that is what continues to pay off. So, and then again, too, it's nice at the same time being able to exit a trade, decent profit on the downside. You're always happy with 10 and 11% for sure. And then get into a nice entry on the upside. I was looking at some really, like, every once in a while, something clicks and it just makes the markets fascinating. And I know that, or many of you probably have seen Bitcoin's comparison to M2, right? If has anyone's here seen or themselves took a look at Bitcoin, in relation to M2, specifically maybe looking at that Bitcoin has not held its previous all-time high. And, here's the thing, because I'm going to make it a really, really nice video. I'm not going to present to you right here, right now. It's for sure erroneous. It's just misguided. It is a good attempt at trying to put together the things. But the signal that it led to and what we should be looking at in relation to Bitcoin is actually going to, it's so crystal clear, and it's going to blow your mind, and it's going to make complete sense. The going back from the top of 2017 to the very bottom, the drawdown in Bitcoin currently, and in relation to the correct usage of the monetary base, it is 100% exactly the same. It's going to be beautiful, but I don't want to get into that right now. That was beautiful. Drive guitar, very nice trading at 19. Oh, you were short at 19. Nice trade. Beautiful trade. Great job. Good job. Nice trading, putting together some good. Obvious is, yeah, I don't know how obvious it was. We just saw a breakout on Bitcoin occur last week. That was great trading. Get on you. Drive guitar. Really good stuff. That's really good timing. And again, I'm also, El Capo, really good timing on the bottom over here. I'm looking at Ethereum, talking about Bitcoin with you. Sorry about that. That threw me off. Hold on one second. I'm looking at Ethereum, talking about Bitcoin with you, right? What about this one? So out of curiosity, why didn't you exit over here on the breakout? I didn't, because I simply didn't have any type of signal, right? I was still holding a short, and that wound up continuing further. But I'm curious. I'm always looking to learn, especially when it comes to what people who are on the right side, the way that they're seeing it. You're certainly on the right side over here, getting short at 19, right? We got short at 23. That was pretty good also, right? And you closed at 19. You closed at 19. I mean, you milked it all. Good job. So yeah, we do a very good job, about discussing this with TXMC trades. That video will be edited today and uploaded tomorrow. Of what, like, a fascinating conversation, and it was done in the format of, rather than having him present to me or me present to him, for us to kind of just discuss the markets together and together try to figure it out. And what's funny is that why we have different views on the edges, like the sweet spot of both of our views, to my surprise, are completely aligned. And a lot of that is, not only, going into the winter, but also potentially going into 2023. And I think that, you know what? I think that a lot of people expect that there's going to be pain from now through the winter into 2023 and beyond. There's a significant amount of people who thinks that from the June low that we are going significantly higher. Let's call it to new all-time highs, and then in 2023 are going to crash and burn. And I think that the most difficult thing for the majority of people, for all of us, would be that if indeed the June low was put in, the structural low was put in June, right? By the way, you could see on Bitcoin this beautiful chart by Luke shared this morning. Luke, aka Lucastas, out on Twitter, and you could see that he's showing this potential inverse head and shoulders forming out on the Bitcoin. And we also saw and have looked at how that's also occurring when we look at the indexes, right? We said, well, we're not calling them. They have to break the green line in order for that to be in play. But it could be happening, and if that does happen, that could be quite a bullish move, and then you could say that structurally the June low is in. Up until then, I mean, this thing is in jeopardy, including right around here. I don't know if it's the 21st, right around here, we have the FOMC meeting, 75 basis point hike. And depending on how continued hawkish they come in, the higher the market is coming into the FOMC, the greater the rhetoric. And coming in with a strong 75 basis point hike, at that point, they might be like, no, we're going to continue. Like, first of all, we believe the economy can take it. Who could argue with that, right? It's hard to argue with that. And then they might say, you know what? And then all of a sudden the market might begin pricing in even higher expectations for the November and December meeting. And that could send this off very quickly. So maybe the whole like new lows, June lows, doesn't happen in September, but it could be happening into October, or the end of September into October, and things could change rapidly, which is why I don't feel that it just the correct posture to have is I'm not deterministic too far out, because I have no idea. It is truly, even though I could say that, is the Fed really data dependent if they are, before getting the CPI number, is they've already made up their minds? Well, that might be something they wanted to get in here for the September's meeting, but we have no meeting in October and a lot of time between September and November's meeting. And I have to believe that truly they are data dependent. And we have to watch things like oil, right? Because if oil does catch a change of trend again, here was the one trend change. If it happens again to the upside, and this starts, especially as winter approaches, all of a sudden spiking up hard, it's going to put the Fed in a tight place where inflation is going to, although it's starting to roll over right now a tiny bit, it'll be shooting back up. And so we don't know what's going to happen. We don't know. Yeah, that's a great one. Everyone. I mean, there were genuinely a lot of people short at that time. That was really well played, and you very. I mean, great job, really. Rob, great morning to you. Good to see you. Mike Elliott, was that bar on the last bar close? Was that buy on the last bar close? So the only buy that has taken place has been on Ethereum. That was overnight. If you check out the Twitter, in the description is the Twitter. As this occurs in real time, this is right over here. This is tweeted out that a buy just took place on Ethereum. But Bitcoin waiting and a couple hours to see. And, again, I'll be buying into what is already a strong move. I don't like that, but I do like the discipline and I do like the results. So thank you, Simon. Definitely appreciate spreading the love over here. John, you too, everyone, thank you for the support. Really grateful for it. JF, great morning. Good to see you. Leah Lightwork, Fabio, and everyone here as we get going. Yeah, I'm not sure, Matt. I mean, I don't if I ever had at any point in time an idea or a way to know or understand which like flavor was going to be in play, I would use a portion of my account to speculate with CTM 2.0 or even CTM 1.0. A lot of people continue to implore inside, right? This is fire inside the Discord and talking about how, especially on altcoins, he continues to deploy CTM 1.0, right? And it works extraordinarily well. And that continues, all the people in the altcoin channel and discussion really focused in on that. If I knew, we talked about, for example, last month, why Ethereum put in a sizable gain. Ethereum Classic doubled it, right? And then you could speculate, well, was that because going into the merge, they felt like there could be some type of speculative play where that is going to fail and they're going to come back to the proof of work chain? And I have no idea. Same thing with whatever's going on with Luna. I don't, I don't know if I had an idea or a way to kind of know where to, like, there's so many different coins out there. Even if you're looking at the top 50 or top 100, it's ridiculous, and it's easy to see after the move, but it's hard to be able to focus your capital ahead of time. Could you see them flipping the cues around really quickly today? I mean, everyone's got to be hyper cautious. Everyone is hyper cautious out there. But so far as the equity markets have opened up, they're looking pretty strong, and we're not seeing much movement anywhere. The movement happened basically so far overnight, and it's just holding on to gains right now. By the end of the day, it's how we started this off. I mean, by the end of the day, we'll see whether or not we're coming into some light local resistance on a Friday. I don't know. I do not have that answer. I think that people are on edge, and I think that continues to be in a bear market. And I think that's also why the rips occur. And the rips that occur are usually swift and violent, and it's because people are positioned wrongly. So it's a tough one. It's a tough one to say. And I think that this over here, this breakdown, right? I think that it had to get a lot of people really like hungry, licking their lips that we're getting ready to roll over here and take out these lows. You could say that, well, we got lucky the way that, no, we just did our thing, and we're able to, by putting the work in each morning, make sure that we stay on top of it, right? Even on the DXY, right? You remember that we said on this first flip in, well, we're going to give it some room over here, waiting for the trend line break over, and now we have the trend line break, and it makes sense to me. I put out a tweet at the beginning of September, talking about as the dollar was taking off, right around here, September 2nd, I think it was, September 2nd or 3rd, and just talking about, let's wait to see what happens when the ECB raises rates, because the DXY is weighted 57% towards the euro. And if we're seeing a divergence in central bank policy now, whereas it was the Fed who was tightening and first, and the ECB continued to ease and ease and ease, and then finally got 25 basis point hike in, but 75 basis point is they're showing that, wait a second, even with these ridiculously high energy prices and drag on the economy, they still feel that they need to get in front of it, and that's what they're doing. And not much has happened, right? Not much has happened, but if you would zoom in over here, what you see the line? I'm looking for the line, right? I guess this is more appropriate. Let's mark it up, and I could say that this spike over here, and then that is for sure formed as support, tested 1 and 2 times, and then you could say that it wicked up here again perfectly into the line, and that's resistance. And the price getting above this, then maybe we'll look for some further extension, right, on the DXY. But we had off the low, and you could see, by the way, you could see that price taking out the low there. This is difficult to trade. You got to be making sure that you're selling resistance, right, in a downtrend, and buying support in an uptrend. But there are many short-term traders who on the break will position in on the break. And that's a tough way to make a living. And it really is, but they get trapped often. So this might be nothing more than a lot of covering, ECB, a lot of volatility, and then just noise. And we don't know if it's noise yet. That's the truth. This move over here so far across the markets, we have to really I pointed out that tweet also, right? And this was, so sorry for pointing out the tweets, but that's what I'm doing. I'm watching the markets and then making observations of what's happening. And that was including over here when the market put in that retest and started trading above. And that was coming off of the day of yesterday's ECB, right? And then Powell spoke afterwards, and Powell was very, confident that listen, we're going to continue until mission's accomplished. We feel like we need to get in front of it, and we're going to keep going. And then the market was like, okay, we're going up. So the market was saying, I believe, to Powell, okay, we believe you then. If you're going to come in and hike 75 basis point high, it was on the leak. It was on Monday. It was on Monday session. It was on this bar over here. It was on that big bar that broke out the trend line. And that's when I said, well, the market is saying to Powell that we believe you. If you're going to come in and hike 75 basis point high, we prefer that than 50 basis point, because you're saying that you believe it could take. Now, maybe Powell, what he's saying is, I prefer to get a recession quicker than later. Maybe he thinks that if the recession comes later, is going to be stronger and longer lasting. That's my concern. That's my bias about 2023, is that's we haven't really seen the job losses come off, begun. And we saw signs of that with some, Snapchat and these other tech companies letting go some of their staff. But once we start seeing real job losses, that has lasting effects in the economy, and it might take longer for us to get out of that. So when we talk about, if not, you want to call it a technical recession, 2 quarters of negative growth, it's more complicated than that from my perspective. But if we come into a real recession at any point going forward, that could then be a bigger of a problem. Maybe Powell is trying to cause that quicker than later. I don't know. I don't have the answers to that. But I don't think that they want to. I don't think that they want to move towards a place where they have to return to balance sheet expansion sooner than later. But I don't know, and I want to be prepared for everything. That's the truth of it. We are great to see you, everyone, here today on this Friday. We are putting the work in. That crispy. And they just came off with the 75 basis point hike too, the Canadians. Thanks for letting me out. You know what I love about doing these live streams with you all? Like this is where I get my information on the markets from all of you. So thank you for when you're sharing your thoughts and opinions. I really appreciate that. I really value it, I should say. Truly. All right. One thing to speculate is where, yeah. So where's all that GPU power going? That's something that I wonder also. I remember a long time ago, going back 4 years ago, there used to be like apps or websites that would tell you like what is the most profitable thing to mine. And you could just mine that coin and then you could, transfer it over to Bitcoin or do whatever you wanted to do with it. I wonder if those are still up and running, or if people are even into GPU mining anymore. And I suppose mining Ethereum was very profitable, so there must be a lot. What happens to all those GPUs? It's going to go somewhere, right? Does it go towards Ethereum Classic? Is that why Ethereum Classic is getting a bid? Yeah, maybe. It seems like a good place to speculate. That's not my thing, but I enjoy it, and I especially like David. If you're able to put it together ahead of time, and then we could like see it happen together. I love that stuff. Joseph, fantastic morning. Mountain Initiative, great to see you here, everyone. So market kind of, even, holding on, extending its gains a little bit. Dollar, everything is on autopilot. We don't obviously have any idea of what the close today is going to look like. Very important, I assume, mainly just to see whether or not these gains are given up or whether or not they're able to hold them. I imagine they're going to, hold them through the day, but I don't know. And I don't know whether, I don't know how far up this thing goes. So, and because I don't, let's take a look over here. Let's see where we got some good old fashioned resistance. All right. Let me try and pull up a different chart. Actually, there's something else I want to talk about with you also. And that is viewing this. A lot of people right now, true to CTM 1.0 style, probably viewing the market like this, with the trend line coming from the all-time high up until the late March, early April high, and then extending it down. I would be very careful about that. Now, that might still provide a good look as we get towards that area. Where's that coming in right now? That's coming in right now around 23,000, right? Is there also horizontal resistance anywhere that we could see around there? I mean, I see much more resistance where we are right now, whether you're looking over here, right? Over in this area. So overhead resistance coming into play pretty soon, right? Getting above it. Is this the resistance or line to be worried about? My own personal choice is the log scale is way more effective when it comes to Bitcoin and these important technical breaks. All right, this has been my observation of someone who watches the market day in and day out forever. So it's interesting, though, without moving that line yet, I'm going to move it in a second, that one could argue, or because it's very subjective on how you decide to do your own art, right? It is very subjective, but I could say, well, okay, resistance, support, resistance, resistance, resistance. So that line makes a lot of sense, and that line is actually coming in a little bit lower, and that line is actually, I could see why we just looked at one line of resistance here. I could also see exactly where this line is coming in from that resistance, where it was confirmed to support and then held as support over here once, twice. So that's like a box. So into this area, I would say, starting a little bit lower from 22 to 23 is resistance. Be mindful of that. And then also, I would also invite you to go ahead and do not get confident that we've had any type of meaningful technical breakout until we have some type of break above this line, where on the log, you're going from the all-time high. And by the way, it was on the log scale also that we were able to say, even though with the highest confidence we are looking at some type of blow off move at the end of the fourth quarter, right over here. We just went from wave one into wave two, and now we're waiting to see if we go into liftoff, and then boom. And when the yellow line over here, it was not on linear, it was on log that had the clean break for us, letting us know there was a technical breakdown to take profits and to de-risk, right? This is on log scale, and then if you extend it out, you can see it's much higher. It's towards $30,000. So again, even if we are able to move into this current and take out, let me just come back over to where we were talking about originally and onto log. If you see some type of breakout over here, you might see a lot of people that are a little bit more confident that some type of bottom is being put in. And I just want you to know that, well, I won't have that type of confidence that we've had any type of meaningful technical repair until that happens on the log scale. And that's a lot higher, right? So watch out for that. So some said we will crash to disgustingly low prices, like a lot of people are talking about. I mean, disgustingly low is there are a lot of people out there talking about 3,000. They're talking about 3,000 because of the NASDAQ and what the NASDAQ did and the dot-com bubble bust. And I saw someone putting out what I don't have it to pull up with me right this moment. I actually probably could pull it up on the big screen. I don't know who actually tweeted it. It was someone that I was not familiar with. And they were talking about one of the main differences between the dot-com bubble and the burst compared to right now. And I think it's something that you'd want to be aware of. It's highly relevant. Let me just go ahead and just take 1 second right here and pull it up right now to the big screen. All right. And one of the major things pointed out, or he's pointing out, is Seth. He's saying, I get asked the difference now in 2000 dot-com bubble crash and 2008 financial crisis. And one thing that he's pointing out is in the dot-com bubble, the 2000, the NASDAQ had a PE ratio, price to earnings ratio of 175. And currently we have a 27 PE ratio on the NASDAQ. So it's not nearly the same. And I know that often a lot of times you see this correlation being made to the speculation that was happening in the dot-com era. And then if you look at it now, they're not really the same. I think that's worthwhile to view as a piece of data. That's why I wanted to share it with you. Talks about in the 2008 financial crisis with trillions worldwide. It was a black swan banking event. And something like that could develop. I mean, this one might not be as far as even in the banking sector. A lot of people are looking for this potentially to occur on a sovereign level. It's just a question of when. And when we talk about these debt spirals, and if you remember, ever since I've been in the markets, people have been calling the death and demise of the dollar. Only they thought that it was going to happen decades ago or years ago, right? And like, for example, Jeff from Dollar Vigilante, if you're not familiar, I mean, he's put out some really good work over the years and been right about a lot, but he's expected already like the dollar's demise. And one could argue, well, it's in motion. Yeah, but it's far from it even still right now. So will we, and other people, some said we'll have a melt up to 50, 70,000. And some say we'll move sideways till after the halving. Some said no bull after 5 to 10 years because of macro. What do you think? So this is all, I mean, actually, I'm going to discuss this one on Monday with Ben from Into the Cryptoverse. And I really want to take up with him. And I want to do that similar to how I did it with TMC Trades, and just like two friends looking at charts, trying to figure it out and discuss it together rather than like someone pretending to have the truth or anything like that. It's really productive. But a lot of people right now are looking at, a high probability or expectations that price on Bitcoin until after the April expected to be, or estimated April 2024 having, that's estimating, average block time from here to there. That's going to be variable and change. It goes by blocks, not by time. But it's right now estimated to be around April 2024, and most people's expectations are that around that time. I have a much better chart of it. If you want me to pull it up, it's easier to speak about it. If you have a moment, let me pull it up. I've been under the impression, if you've been following my work actually, that the structural top was in April of 2021 and not in November. I would have to say, when I viewed this in light of the monetary base, that points to a November high, December 2021, 21 high. So again, that puts me into a position where I need to consult and continue to consult multiple vantage points and not just be like focused and or deterministic about one, including what I just showed you regarding log and linear for the meaningful technical repair that's going to occur on Bitcoin. We just don't know. And you could see, by the way, if we start off by using the April top, and structurally this for many different reasons, both on-chain and traditional indicators, point, as well as the euphoria that took place, they point to this being the structural top. And if you line this up in April with the previous tops, you could see, I mean, why not the same? There's a lot of similarities, including that this capitulation that took place, and whether it's the low or not, we still don't know. You saw in roughly 50 days a 50% capitulation. In 50 days, a 50% capitulation. In 50 days, a 50% capitulation. So there's a lot rhyming, and you could see the bottom here, and then you made a move up, and you came down and retesting it as we are now, and the bottom over here, and you came up, and you came down and retested it at, as we are right now. And there are similarities, but I don't know what happens next. That's the truth of it. There are a lot of people who believe that price is, by the way, usually from whenever that bottom is. And if you're lining it up structurally from April, then you're in the zone right over here where past capitulation has taken place. And in 2014, 2015, this actually went sideways for a long time and then made a big leg up and then went sideways into the halving for a long time. This was different. Out of the bottom here, we had a really incredible 4x in a matter of 6 months. And then price was, I think, doing its thing. And then we had a global crisis, global lockdowns that attributed to this major anomaly. And then price consolidating long into the halving. And whether or not this would resemble any one of those two, I mean, look, it could be similar and it could rhyme. And then your expectation might be that, this is the halving over here in March 2000 and April 2024. Are you not looking at price making a new all-time high to then? If the April is the structural top, and again, we don't know, I imagine that price would be making a new all-time high before the April 2024 halving. And I do think it's dependent on the macro as well. There's no way that Bitcoin on its own, if we're looking at like whether or not a bigger leg down now that leads to, whether it's another year or two, really strong, like this is like what it looked like from 2000 to 2002. And we've also looked at just one piece of data pointing to, well, it's a lot different. He can look at the NASDAQ today and the NASDAQ down. It is a lot different. But if that were to happen or something like that were to happen, then obviously Bitcoin would not be making new all-time highs. It is dependent on the macro. and whatever happens. Or it is possible that we come up here and whether or not we make new all-time highs or not. Again, this is off the April top first, right? It does whether or not this is the whether price has any type of relief rally and makes new all-time highs. I'm worried about 2023, like sincerely. And is it possible that we then roll over and take out the low? Yep. And if the Fed comes in with some type of quick reaction by the summer of 2023, would it be possible that price would be able to rally before the halving and make a new all-time high? I mean, if it depends on what happened, right? It depends on what the situation of the economy was, and it would be dependent specifically on whether or not we saw a sharp rise in the Fed's balance sheet or not. And if we do, then it's debatable. We will see. We have seen Bitcoin in a short amount of time make enough of a move to do that. So depending on where Bitcoin's this is from 3,200, 3,500 to 69 in a very short amount of time. So if Bitcoin were to bottom at somewhere around $10,000, $12,000, and then that's with the Fed coming in, is it yeah, it's possible. So anyone, like, you should have all these type of scenarios in your head because it's impossible to know which one it's going to be at this particular point. And is it possible that this current rally wounds up, causing equity markets to make new all-time highs in the face of the massive, let's say, energy crisis taking place across Europe, the potential of the war escalating in Ukraine, even becoming nuclear? Yeah, all those things are very real right now, and it's why it's very scary. But the markets do have habits of climbing these worlds of worry. The market's aware of all these things today, and because of that, you would expect it to be trading lower, and it's not yet. Let's get past this month's FOMC and take a look at it. But I also want to look at it from November's high again. Even though for me, I up until this moment, up until yesterday, I felt very strongly about April being the structural high. What I think is probably the more important indicator, I will share with you soon. It does point to this being the structural high, and a lot of people believe that what this is going to look like is similar to the previous cycles, where coming into April 2024, Bitcoin will be off roughly, let's call it anywhere between 40 and 60%. Like in this case, it was off 60%, and in this case 40%, and Bitcoin being off 50% or trading somewhere around $35,000. And then after the halving, moving towards some type of like 6 months before making that move again to all-time highs. And yeah, you should be aware of that one too. That could happen. And this one's probably the best scenario for the most people because it gives you the most time to continue to position in, to accumulate Bitcoin. And regardless of what's happening with the macro from here up until then, I think that there's going to be some type of front running that takes place off of retail and maybe even institutional speculation. And that I think is going to drive price. I think it's going to give us similar movements that we saw over here, which both of these moves are essentially, this one over here is front running of the halving. And I think that wherever we bottom out into the halving, we'll see a decent, sizable, tradable move. And then afterwards, so those are my feelings on it. But the price seems to shoot up to 69K after that. Suppose why? Yeah, so it's a great question. If this is the structural high in April, right, then how did price make or move to an all-time high? Because price made an all-time high over here. And what we've looked at, by the way, through the lens of the rational root, and he showed us what's happening on chain. And what's happening on chain over here during this period is that the long-term ratio of Bitcoin holders is increasing. It continues to increase. And short-term holder ratio continues to decrease. So that means that there are not new buyers entering the market on this move up. So it's almost the conviction from long-term holders and just people not looking to sell that this move is almost exaggerated and makes the new all-time high. I think that's, for me, the clearest way to answer that question is, how is it possible then that price makes that new all-time high in April? And it comes from looking at what's happening on chain and seeing that actually we're seeing less and less short-term hodlers. They're actually starting, and they're the first ones to actually sell on the way down. And the people that were holding long-term, they continued accumulating, adding to their positions, and holding. The macro is unprecedented, and anyone who is believes they have the answer is completely, and it could change rapidly. And you know what, Rob? We were very clear about how quickly it could change and how rapidly it could change, and we did that in June. There's actually a video on the channel talking about the macro could change rapidly, and we watched this sell impulse take place. And since then, the macro has changed rapidly. Over here at this particular point in time, like, the general consensus out there is that the Fed is tightening because of inflation and things are going to break. And I'm surprised they haven't broke already, but things are going to break. And then we watched, food and energy, some of the greatest causes of headline inflation, come off substantially. And we knew that CPI is a lagging indicator. So when you saw the 9.1 print and then the markets rally in June, right? 9.1 CPI and markets rallying, that was an indication that the markets were actually looking at and saying, you know what, that might be the peak of inflation for a minute. And then when you saw the 8.5 print and you saw the first sign of inflation coming off, again, the markets continued to rally. Powell's FOMC was shortly thereafter, a week after, and he was like, yeah, I believe that we're close to achieving neutral rate, which means that they're going to be like lessening the degree of hikes. And people say don't fight the Fed, and that Powell's, delivering very clear-cut communication. Well, he did there, and I believe that. I truly believe he meant that when he said that. But the market did too, and the market front ran it really quick. And then that was bad for the Fed. The Fed did not want that. It just erased all of the tightening that they had just achieved. So you saw the Fed speakers, and then you saw Powell and Jackson Hole walk that back, right? They walked that back and now we got into a more comfortable place, but we're rallying here again, and that can't be good as we come into the FOMC later this month. If price again is higher, that's going to give them the more hawkish they're going to have to be. I mean, does that mean that we could be looking at higher than a 75 basis point hike? I don't know. We'll see what happens next week. We'll take a look at all that. Do I think that there's a much of a correlation in the 10-year yield June top and equity markets bottom? Crispy, I mean, it wasn't just like oil was what we were watching. We were watching the 10-year. And, we saw that top occur over here on the 10-year. And I personally think what happened over here is that you could see right now the extraordinarily tight correlation between the 10-year and the US dollar, Japanese yen. Japanese yen makes up the second biggest ratio of the DXY. And when we saw the 10-year come off and put less pressure onto the Japanese credit markets, and more importantly, when Powell said we are close to achieving neutral rate, everyone who was like positioned, and all these large funds that were positioned against the Bank of Japan, essentially, they had to then like reposition themselves, and they did that very quickly. And then you saw the 10-year continuing to, this is, I mean, really just noise, right? This is price now ranging out. If we look at when QT started and the 10-year, this is very similar behavior. The 10-year like comes off a little bit, and then it like goes sideways before rolling over. And those are my expectations of what's going to happen. Why does that happen? Is it because of the market begins pricing in expectations that quantitative tightening is going to cause a recession or whatever it is? I don't really know the why. And we only have one other cycle to go off of, but it looks very similar to what we saw in the past. And I think that the softer dollar at that point equities rise, just like we're seeing like that sign today. Dollar comes off a little bit, and you see risk like finally able to take a breath. How much further there is to room to run to the upside, or whether or not it takes out the high over here. I mean, look, that's really going to be dependent initially on what happens next week's CPI, and then more importantly, the following week after that. And don't forget, we could come back towards the bottom of this range. We could come back towards the bottom of this range. And then if we start seeing commodities rising towards the end of the year, if we start seeing food and energy really like rebounding strongly, then this thing could really the timing of it I don't know, but into the end of the year and early next year, if we're seeing this take place, like inflation rolling over and then that thing, this is going to be screaming upwards. So I think that's it. Rob, I mean, no one's experienced in these things. That's why you want to consult all vantage points and not become deterministic about what is going to happen. These are unprecedented, and it takes that type of attitude and it takes work to be able to navigate through them. So, thanks for being here on this Friday. Thanks for putting in a strong week, everyone. It was a very strong week here. Look forward to doing it again with you all next week. If you have the opportunity on your way out, if you're on a mobile device where it's a little bit harder, could you take a second and smash the like button for all of the work and dedication we put in this week? I will see you. Yeah, I mean, one thing also about the euro dollar is there's Vacanet. That who and where did I hear just offer this type of insight? I'm not really sure. If it comes to me while I'm talking, I'll let you know. But one thing that was put out there was that ever since March 2020 and the massive expansion of the Fed's balance sheet, the role that the euro dollar has played in the market has been reduced. There's something, like let's call it third place now. And what's in second place? I don't know if it's the treasury market. It must be the dollar and then the treasury markets. Anyway, if I could point you to the resource Vacanet, if that comes up or if anyone triggers for anyone else, please go ahead and let us know in the comments, and then I could get it in front of Vacanet. I felt like it was also just like this is like one little tiny piece of information that I just wanted to get in front of you. It makes sense to when you're making that comparison between the dot-com bubble and bust to take a look at what the difference is in the market now. It also, that's kind of one of those things. It just makes sense. It's one of the things that you file in amongst all that other information you have. And then it just helps to further that awareness. JF, Mark, Pat, thank you, Crispy. Everyone have a beautiful day. Have a wonderful, wonderful weekend. God bless you. Thank you for being a blessing to me. Big shout out to anyone here on the replay crew over the weekend. Look forward to seeing you all again next week. Have a great day, everyone. I'll talk to you soon.